afternoon, everyone. My name is Anne-Marie Van. Today is Wednesday, April the 12th, and this is the Leeloo Level Up Midweek Report. We're going to take an overview of the market, take a look at stocks and the future space to see where we are at. We're going to start with the options market summary from Trading Ticks, which I absolutely love. Got a lot of negative flow, and you can see here's something very, very interesting. When the puts start moving straight up and the stock starts moving straight down, that would be the SPY because it's got the biggest zero DTEs that we're watching. They're going to give us flow for the market, and we can see right at about 220 the market really started drifting, and it continued to drift almost all the way into the close with a lot of negative convergence. It was a day that started very high and moved very low. And at the end of the day, we could see that this 408 level was the number, the strike that everyone was looking at. Zero DTE flow, negative all day long from the moment the market started moving in. But you'll notice price was trying to move against that, but it could not hold. And again, right around that 2:20 Eastern time, the wheels came off the bus. And that is what we are looking at into the flow. Flow really does remain mixed in the early parts of this time frame. It gets a little bit more bullish down to these edges, but monthly flow still showing a lot of negative action here. Not really sure what that is all about. Okay, so that's really the big thing to look at. Daily options flow, weekly options flow. Those of us that do trade the stocks as well as the futures market, these things are pretty important to watch. Realize that the big guns that really hold the market up are the ones that we want to see with bullish premiums. And those are really starting to drift, particularly in tech. All right, let's jump right into the charts. I'll start over here with the ES. I've got a little bit of a different space for us to look at things. And so what we're going to look at is what the overnight formations are likely to tell us and what we might see into tomorrow and the next day. So today we had, you'll notice the volume profile doesn't start here because I do start it at the opening tick. Starts at around the 4161-ish area, and then we can see all this area all the way up into 77. That's what happened with the CPI report. We're going to look at 4161 as a line in the sand that we really need to pay attention to, because if we break above it, it's going to show traders trying to push to the north. What we can see overall is that they are trying to hold the bottom. But what's happening is a lot of traders get the sense that we are going to drift lower. But what's happening is as we drift lower, buyers come into play. This is one of the first days in quite some time. Let's see, 1, 2, 3, 4, 5, 6 days that we actually closed around this region and didn't bounce up and over this 4127 area, which is very, very important. It's almost the line in the sand to watch. We're sitting underneath it in the aftermarket, and when 6 o'clock rolls around, the traders are going to try and recover this edge that they lost at 4121. If they don't do it, that's going to end up being a shorting space. So you want to look between 4127 and 4134-ish to see for shorting environments. If it holds above that area, breaches that 4134 and pulls back, but holds this 4127, then you're going to be able to look for upside pressure that's going to try and come in. The VPOC at the end of the day was around 4144, and if you look, over the last 3 days, we've had an increasing line on the VPOC. Here we had a decreasing line on the VPOC. It stayed a little bit sideways, and then these last 3 days, this VPOC has been moving forward. We want to see if that holds into Thursday and the end of the week. Friday is going to be really important. We've got earnings for the banks that begin, and the banks are going to tell us what their forward thoughts are in terms of their ability to lend. Regional banks really are going to be the most important things for us to watch here. And that reminds me, I'll do that on our weekend update. We'll look at the ETF that manages that group of real estate. All right, so what do we want to look at? We want to see the bounce into 4127 that holds on a pullback to think about upward action, or the bounce into 41.27 that fails, that gives us pullbacks that are likely to come into this 41.05 area. That's the line that I am looking at for relative support. So that really is the state. If we lose it there, a lot of buyers have been coming in at that 40.96 zone. If we lose there, we've got all the way down into these areas, but I have the suspicion that we're going to sit sideways into the earnings formations. Let's take a look for the SPY. Very quickly, the numbers we want to look at, you can trade SPY in the after hours, but here's the real number that we really want to see. Take a look at where the SPY closed and what's been happening with its volume point of control. It's up, it's down, and so we have really nothing that's telling us this thing is moving out. My suspicion is that we come into where we see most of the price action holding in terms of options that are being sold. This 405 support area is going to be key. Now, if we can get up above this 408.30, 408.60, we're going to be able to move back into 409 and then 410. That's what the charts are going to go after. Notice how much of the pre-market and aftermarket clearly not in the profile all the way up here. So a lot to think about. 413 being the top of the range, 405 being the bottom of the range, and then the whipsaw is going to tell us where we can trade this sideways formation. Essentially, the hold down at 407, maybe not super strong. My thought is it's closer to maybe 406 and some change. We'll see, but those are the levels that you want to watch over the next coming days. Realize that because of the upward momentum, we are still finding buyers on the pullback. Don't short a brand new low until you've seen it bounce and give you a lower high. Let's go to the NQ. What we see with the NQ right now is tech is weakening. Look, we are underneath this moving average that I like to use. We're sitting underneath there, and all of these levels, these are monthly levels from the past. We're sitting well underneath there, so there looks to be quite a bit more fading coming in to this market. Again, this is a big bounce zone. Traders at the open tonight, they're going to try and lift off of these edges. If they don't, we've got a couple of areas that we want to look at. We want to look at 12,871, and we want to look at 12,746. Since we are underneath an upward sloping moving average, it means that we're still going to find buyers at the lows, but as they bounce, they're going to bounce into a lower high. So what's that lower high today? As we come into the overnight and potentially tomorrow, 13,125. Listen, as soon as the traders can pull us back above this 13,050, buyers are going to get more enthusiastic about pushing us up the lines. So remember, you want to wait for the bounce. As it fades, you take the short down into the heavy congestion. If it loses it, great. You can travel down, but the closer you get to these edges, the more likely it is that traders are going to try and hold this bottom. If they don't, we could flush all the way down to these edges, and I'm seeing a lot of risk off in the Qs. So you want to be super careful about thinking that buying the dips are going to hold for any more than the quick trade. Here is the Qs chart, and we can see right there, we just closed just off the lows, 312. Look, what am I looking for? I suspect that we come in and test the 310 area. It just seems likely in this particular space. 70% of all the action is sitting up here. Again, buyers are going to try and get up into the zone. Maybe it's 315 and they lose it, but the bounces can go all the way up into the top here. 320 was the high that we had into that CPI number right at the 320 area. That's still the range. So if you trade in the middle, it better be a quick break to support or a quick break to resistance, but don't hang out in here. You're going to open up a ton of risk in your account. Let's take a look at the YM. YM is still the strongest of the bunch. As we know, or maybe we don't know, foreign divestment moves into the US market through the diamonds and the Dow. And so we can see that there's a lot more upward trajectory here in this chart, still holding these support zones. One of these areas we're going to have to look at really is whether we can hold this 13,780. That's right about where we closed on the day. Are traders going to try and bounce up? Yes. Take a look at this low volume node, 33,820, 840. Somewhere around here is going to be that line in the sand. If we bounce into this zone and we cannot hold it, or we bounce in, make a lower high and lose it, we're going to step right back down into these spaces. But it is clearly bullish. Pullbacks are clearly being bought. So you want to pay close attention to that. 13,780 again. The lower edges look to be 13,604. All right, here we are with the diamonds. Same sort of thing, doing fairly well, not at the all-time highs, but doing a lot better than the other indices that we're watching. Look at this, sideways action that breaks out and holds. So here we are. Is it a failed breakout? If it's a failed breakout, it's going to lose this area, bounce, fail to recover 337, and then come back down through 335, and then eventually end up at 334. How do you trade these things? You trade them carefully, right? You watch the level, you see the buyers come in on the tight time frame, you place your risk event to make sure that you are not leaving too much room for the chart to move against you. You take the long up into the area as it bounces, but if it cannot get up over these highs, do not wait around for that, because the price action easily could bring you into the congested areas of where the other instruments are sitting at this particular time. RTY is the weakest of the bunch. That's because all the regional banks sit in here. We had an alert set the last time we were here at this particular zone. It hasn't touched it, but it's come awfully close. So right here on the markets, when things open up, if we fade quickly, there's going to be a bounce down here. People are going to try and buy these support levels and push them back up into the range. So right now we're looking at a floor of 1780, something like that. We're going to see a pullback to 1771 and 1756 if the price action does not hold. Those are the levels for you to watch for downside targets. For upside targets, if it holds this and begins to bounce, we've got two low volume nodes sitting here, one at 1796 and one just a little bit closer to where we are at 1788. I think charts are going to be fairly choppy in the overnight. Bank of England just came in and said, hey, listen, we're going to stop quantitative tightening if we see instability coming into the market. A lot of people expected the market to hold these levels on the CPI, but it absolutely faded, and all of that negative hedging that I see in the market certainly looks like it's coming out in these charts. So here we are taking a look at the IWM. It's got a little bit lower volume than all these others, but have a peek. Notice that the IWM is also weak, also sideways. Notice this moving average isn't even flowing upward. It is flat to sideways. So this pullback here into 175 gives us a potential bounce to 176.30, 176.40, top of the range 178. But again, it seems much more likely that a drift into 174 and potentially 172 before the buyers come back in and try to push price action up. Next, we're going to take a look at gold. Gold's been running super hot, but every time gold starts running super hot like this, really bouncing, it does revert to the mean. So where might that be? For gold, we're looking at a lot of compression, and so the high is around 2032. What do you want to do if it breaks that level? Well, I don't like the idea of being long, but you could take a quick long up into the top of the range and get out, because I do not see anything that says, hey, this is going to break supremely higher. I simply don't. On the lower end, we've got 2020 to 2015 as price action for a support edge. If it loses that area, it's going to step down into 2008 and then 1996. But everyone is hot and heavy about about gold. So what we really want to do is be super careful. Don't chase this out. It's gotten way overheated. It needs time to digest. Are they still buying the dips? You betcha. Where do you want those dips to be the most advantageous? For me, I'd be looking at about 2008. That's what I'd be looking at there. For the gold chart, GLD also looks the same, looks a little tired, looks like it needs to take a breath. What do we want to do? It closed up above its moving average. So that tells us the dips are still buy zones. You want to look for that 185 as the floor to help you with upside motion. Take profits at about 180, 188, 187. And if it loses 185, anticipate that the buyers are going to come back in, but I'd wait until it came down and test this 183 area, and you'll be in great shape. Lastly, oil's been a beast, and it's going to continue to rise. This is the one thing that I think is really going to hammer back on folks thinking that inflation is nipped in the bud. It's certainly pulling back, but this energy event is really going to be something very, very important. What do we want to see? We want to see a pullback that'll give you a test off of the recent highs so that your risk is low. So maybe you're looking at the bounce that comes off of 82. Notice a lot of sellers at the 83.50 area. If it comes back, sits in the low volume node at around 82.90 and holds, you're going to have yourself good upside pressure into the next zone. This area is the one thing that's going to be the most interesting thing to watch. And if it comes in, that's where the real buys are going to be. I'm really not sure that this chart is going to give us a shot at that at all. Any dips that you see in this market coming into regions near 81.40 to 82, they're going to be buy zones in this particular environment. Taking a look at the USO, we can see the same sort of things happening. Sideways for a while, and then a breakout really far from the moving averages that I like to look at. Maybe you want a super tight one, but notice very little overlap over the last day from this breakout. So what would we like to see? I'd love to see a retest of 70, right? I'd love to see a retest of 71. Those two areas are going to give us a really nice region to consider the long. And that is going to push us up into the 72 area if we can pull back over the next couple of days and find ourselves support action near the 71 area. It's going to be a great trading event. Good luck. This has been the Leeloo Level Up for the midweek. Take care and stay focused.